was talking to a friend the other day about investing, and he casually mentioned something that stopped me in my tracks. He said, most millionaires don't actually tell people this, but it's the main reason their wealth keeps growing. At first, I laughed it off. I thought it was just another vague tip people throw around. But the more I dug into it, the more I realized he was right. This isn't some flashy stock tip or risky scheme. It's quiet, almost invisible, and it's been the backbone of wealth for people who seem to always be ahead while the rest of us are chasing trends. Honestly, I've made the mistake of overlooking it myself, thinking traditional advice was enough. And that's exactly why most people never get rich. They miss the secret that's hiding in plain sight. So in this video, I want to break down that one hidden strategy millionaires quietly use, why it works so well, and how you can start applying it before it's too late. Stick around, because once you see this, it changes the way you think about investing forever. When I first started learning about how millionaires think about money, I noticed something strange. People would talk about stocks, real estate, businesses, or diversifying, but there was always this quiet layer beneath the surface that never got mentioned in the mainstream advice. It wasn't flashy. It didn't show up in the headlines or the Instagram post with fancy cars and big houses, but it existed, and it consistently separated people who were just financially comfortable from people who kept multiplying their wealth year after year. I remember sitting with a friend who had quietly become financially independent in his early 40s. He didn't brag about it, and he didn't have some wild portfolio of meme stocks. When I asked him what his secret was, he laughed and said, "It's not what you think. It's almost invisible to most people." And that's exactly what fascinated me. I realized most people were chasing the obvious, the visible, the things everyone talks about, and missing what actually worked in the long term. Think about it like this. Imagine you're walking through a crowded beach, and everyone is focused on finding seashells on the sand. They're bending over, digging around, hoping to find something shiny. Meanwhile, a few people are noticing the patterns in the waves, the currents, and the hidden treasures that wash up quietly, unnoticed by the masses. That's what the secret looks like. It's not flashy, it's not obvious, and most people completely miss it. Here's the wild part. I almost missed it myself. I was reading all the books, listening to podcasts, following the experts, and still couldn't figure out why some people seemed untouchable when it came to growing wealth. Then I started observing behaviors, asking deeper questions, and noticing patterns. There were repeated strategies, repeated mindsets, and repeated actions that almost nobody talked about. And the deeper I dug, the more I realized the number one secret wasn't in any of the usual places. It's not about picking the right stock at the right time. It's not about timing the market perfectly. It's not about flipping real estate or lucking into some viral investment. Those things can help, sure, but they're volatile, unpredictable, and often downplayed by the very millionaires who rely on the real secret. The secret is quieter, slower, and more powerful because it works whether the market is booming or crashing. I started noticing it everywhere once I knew what to look for, in conversations with self-made millionaires, in long-term portfolios, in unexpected assets that never got media attention. And the pattern was clear. Those who mastered this secret had built layers of wealth that compounded quietly over time. Meanwhile, the average person was still chasing trends, trying to make up for lost time and constantly reacting to what everyone else was doing. The key to understanding this secret isn't complicated. It's simple, but it's counterintuitive. It goes against what most people have been taught about investing, saving, and financial security. That's why it's so effective, because it's overlooked. And that's exactly why I want to share it with you today. Before I reveal it, though, it's important to fully appreciate why this secret works so well. It works because it leverages human psychology, time, and the compounding effect in ways that most people completely ignore. And it works quietly, invisibly, so you don't need to rely on luck or flashy trends. revealing the secret and why it works. The secret in its simplest form is this: millionaires don't rely on luck, timing, or conventional hot investments. They focus on acquiring and controlling assets that generate consistent, compounding value over time, often quietly and privately. In other words, they invest in things most people overlook, undervalue, or can't even see, and they let these assets grow without constant interference. Think about it like owning a well-tended orchard. While everyone else is chasing shiny, unpredictable fruits that appear for a moment and disappear, the millionaire's orchard grows slowly, quietly, and reliably. The trees produce year after year, sometimes decades of steady growth, and nobody else notices until it's already worth a fortune. One of the first times I saw this in action was with a friend who runs a mid-sized business. He wasn't bragging about stock options or day trading. Instead, he quietly reinvested profits back into systems that generated cash flow, intellectual property, and recurring revenue streams. Year after year, these assets grew exponentially, and while the market fluctuated, his wealth consistently expanded in ways no headline would capture. The key isn't just owning assets, it's owning the right kind of assets that compound quietly. These can be intellectual property, private businesses, rental properties, digital platforms, royalties, or stakes in ventures that aren't publicly hyped. The common thread is that they don't rely on guessing the next big thing or reacting to headlines. They generate value whether you're watching the news or ignoring it completely. Here's another perspective. Imagine two people investing $10,000 each. One puts it into the stock everyone is talking about, hoping for a quick 20% gain. The other buys a small piece of a business, generating $1,000 a month in passive cash flow. Over time, even if the stock soars and dips wildly, the business continues generating money consistently. A decade later, the second person often ends up far wealthier than the first simply because they focused on long-term compounding value instead of hype. I've personally experienced this principle. Early in my investing journey, I chased trends like everyone else: stocks, ETFs, even some cryptocurrencies that seemed promising. I saw some gains, yes, but I also felt the stress of volatility and the fear of missing out. Then I shifted focus to assets I could control and that had predictable compounding returns. Suddenly, investing didn't feel like gambling, it felt like planting seeds that would grow reliably over years. The emotional stress disappeared, and the wealth accumulation became almost automatic. Millionaires understand another subtle aspect. Control matters more than visibility. Public assets are hyped, liquid, and highly visible, but they're also exposed to everyone's speculation. Private, controlled assets, on the other hand, often give you the ability to make decisions that maximize long-term growth. Think of it like navigating a crowded road versus having your own private lane. You move faster, more efficiently, and with far less interference. What makes this secret so powerful is that it leverages time, patience, and compounding in a way the average investor often underestimates. Most people expect instant results. They think wealth comes from luck or quick wins. Millionaires understand that real wealth is rarely flashy. It's the steady accumulation of value, quietly building while everyone else is distracted by trends, FOMO, or the latest hot tip. Consider a real-world example. I know a small group of creators who built digital courses and intellectual property quietly over the years. They didn't market aggressively at first, and nobody was paying attention. But the moment the first few courses generated steady revenue, they reinvested, expanded, and automated. 5 years later, their assets produced more income than a traditional high-paying job. Yet most people had never even heard of them. That's the power of quiet, compounding investments. Another element of the secret is minimizing unnecessary transactions. Millionaires don't constantly buy and sell based on emotions or hype. They make calculated moves, let their assets grow, and resist the urge to chase every hot trend. It's like tending a bonsai tree. Frequent chopping and overmanaging can ruin the growth, but careful, deliberate care leads to a masterpiece over time. Actionable steps to apply this secret. 1. Identify undervalued or overlooked assets. Think beyond the stock market to businesses, digital products, real estate, royalties, or private equity. 2. Focus on control and compounding. The more influence you have over growth and reinvestment, the better your long-term results. 3. Be patient and consistent. Resist the urge to chase every trend or headline. Long-term wealth compounds quietly. 4. Reinvest systematically. Don't withdraw gains immediately. Let the asset grow and create a snowball effect. 5. Track your progress without obsessing over daily fluctuations. This keeps you from making emotional decisions that hinder growth. By now, it should be clear why most people never discover the secret. It requires looking beyond the obvious, ignoring noise, and thinking decades ahead. The average person spends so much energy on visible investments, instant gratification, and reactive decisions that they never notice the quiet compounding happening elsewhere.
Another key element in scaling is strategic partnerships. Millionaires often collaborate with trusted people who bring complementary skills, access, or capital. Partnerships allow them to enter opportunities they couldn't achieve alone while still maintaining control over their portion of the asset. Think of it as stacking building blocks. Each piece strengthens the structure and multiplies potential returns without overextending oneself. A common mistake people make when trying to scale is spreading themselves too thin, buying too many assets too quickly, or taking on ventures they don't fully understand can backfire. Millionaires mitigate this by focusing on assets they can control, understand, and manage efficiently. Scaling doesn't mean quantity alone. It means smart, compounding layers that work together. Another overlooked factor is tax efficiency. Quiet assets often have advantages that the average investor ignores. For example, certain business structures, real estate depreciation, and capital gain strategies allow wealth to grow faster while minimizing unnecessary tax drag. Millionaires leverage these strategies quietly, often consulting advisors to optimize without making it public. One fascinating example I've seen is digital content creators. They create a few high-quality online courses, then reinvest the profits into marketing and new courses. Over time, the library of content grows exponentially, generating recurring revenue from multiple sources. Each new course compounds with the old ones, building an ever-increasing passive income stream that requires less hands-on work as the system scales. Scaling also involves protecting your assets. Millionaires understand that growth is only meaningful if it's preserved. They implement legal protections, insurance, and careful asset structuring to shield their wealth from unforeseen risks, lawsuits, market downturns, or economic shocks. This isn't about paranoia. It's about maintaining the compounding engine without interruption. Another vital point is continuous learning and adaptation. Markets change, technologies evolve, and opportunities shift. Millionaires stay alert, not chasing every trend, but identifying when new controllable assets or compounding opportunities arise. They adapt strategies while staying true to the principle: quiet, compounding growth in assets they control. Here's a practical roadmap you can start applying today. 1. Start small with one controllable asset: real estate, a small business, or a digital product. 2. Reinvest returns consistently. Let profits compound instead of spending them. 3. Layer additional assets over time. Gradually scale by adding complementary compounding assets. 4. Leverage strategic partnerships. Gain access to opportunities while retaining control. 5. Protect your wealth. Legal structures, insurance, and diversification reduce risk. 6. Stay disciplined and patient. Ignore hype, focus on long-term compounding, and monitor performance. 7. Adapt and expand when appropriate. Look for new opportunities without abandoning the core principle. The biggest pitfalls to avoid while scaling are chasing trends instead of focusing on controllable assets, over-leveraging or taking on assets you can't manage, ignoring reinvestment, which slows compounding dramatically, letting emotions dictate decisions during downturns, failing to protect assets, leaving wealth exposed to avoidable risks. One real-life case study. A small investor started with a single cash-flowing business, then reinvested profits to acquire a second business in a complementary niche.
Over a decade, these two assets grew into a mini portfolio, generating more passive income than the investor ever earned in a traditional job. They scaled slowly, avoided shortcuts, and focused on compounding, all without ever chasing viral trends or public hype. The final insight here is consistency over intensity. Millionaires aren't constantly hustling or gambling for the next big win. They layer assets, reinvest, protect, and allow compounding to work quietly over years. That's why the secret works. It doesn't rely on luck, timing, or luck-driven speculation. It relies on time, patience, and smart control. 3 things anyone can apply. By now, the full picture should be clear. The secret isn't about flashy investments, day trading, or guessing trends. It's about finding undervalued or overlooked assets, maintaining control, reinvesting systematically, protecting your wealth, and scaling consistently over time. Master these principles, and you're playing the same game as millionaires, but without the hype, stress, or risk of guessing. In conclusion, this secret is available to anyone willing to approach investing differently. It requires patience, discipline, and a focus on assets most people ignore. Start small, scale gradually, reinvest, protect, and layer wealth-building strategies. Over time, compounding does its quiet, powerful work, and the results are life-changing. So now you know the secret millionaires don't talk about. Quietly focusing on controllable, compounding assets, reinvesting consistently, and scaling smartly over time. And the crazy thing is, it's not complicated or reserved for the wealthy. It's something anyone can start doing today if they're willing to think differently and play the long game. If this video opened your eyes to even one idea you hadn't considered, do me a favor and hit that like button. It helps me know you want more deep dive strategies like this. And if you're serious about building real wealth and staying ahead of the curve, subscribe and tap the bell so you don't miss the next video that could completely change the way you invest. Oh, and share this with a friend, coworker, or family member who's tired of chasing hype and wants to see what really works. The truth is, most people will never discover this secret because it's quiet, patient, and disciplined. But now that you know, you've got an opportunity to use it to your advantage. Remember, real wealth doesn't come from luck or timing. It comes from consistent action, compounding, and control. Start small, stay patient, scale carefully, and watch your quiet assets do the heavy lifting for you over time. Your future self will thank you for it.